I'm Fred Martinez, the Tax Marshal, and today we're going to go over the game changer, an S corporation. So if you want to be an S corporation, and right now you're a sole prop, you cannot convert a sole prop to an S corporation. So what you have to do now is we're going to have to create an LLC, and that LLC, for all practical purposes, can be converted to an S corporation. But did you know that the chances of getting audited with an S corporation is 15 times less likely than a Schedule C? Well, what's some of the requirements for an S corporation? Well, it's the same structure as a C corporation, the same documentation to set up and maintain, the same asset protection. But the biggest thing about the S corporation, no double taxation. An S corporation is a pass-through entity. Income flows to the 1040 individual return. Some will argue that the corporation tax return is fixed at 21% compared to the individual tax rate, which is as high as 37%. But they may be wrong, because when you receive dividends and or take W-2 wages, then you will have to pay taxes on it. This is where the double taxation occurs. Now let's compare this to a sole prop and an LLC. So on the Schedule C, let's just pretend that you make $100,000 in net income. So in self-employment tax, you're going to pay 15.3%, which is $15,300. So then on the individual return, you have $100,000. You get a standard deduction of $31,500. So your total income is going to be $68,500. You're going to be in a 10% tax bracket, which is going to put you at $6,850 in income tax. So your total tax between these two is $22,150. So now let's compare that to the S corporation. So now we're making the same $100,000 in net income, but we pay you a fair and reasonable wage of $50,000. So then on that $50,000, because we're doing W-2 wages, you're going to pay self-employment tax of $7,600 on that. Then on your 1040 return, you're going to have $50,000 in W-2 income. You're going to get line 8 additional income from Schedule 1 for $50,000. So the net income is still $100,000. You get your standard deduction of $31,500. It still puts your total income at $68,500. And if you fall into the 10% tax bracket, that's $6,850. But look at the total that was paid, $14,450, compared to the $22,150 that was paid with the Schedule C. And so your net savings there is $7,700. That ain't no petty cash. What are the requirements of an S corporation? Well, you have to have an LLC or you have to have a corporation. You cannot have more than 100 shareholders. It's only for individual, certain trusts, and resident aliens. You must file a form within 75 days of formation, and there's only one class of stock and pro rata distributions. If you don't file that 2553 form on time, there is Rev Prof 213-30. Then what we do is we'll put reasonable cause that it was delayed to administrative oversight by the prior accountants or the owner. The reason must be typed and both in the cover letter and the actual form. S corporations must pay a reasonable compensation for services rendered before making distributions. What is the rule on reasonable compensation? IRS Fact FS 2008-25 IRS topic number 7621 highlights that. It's the ratio of compensation to distributions is what the IRS looks at. And they use a DIF when scoring to analyze the ratio patterns on tax returns. Beware of an S corporation as a partnership. Typically, husband and wife, we want them to be on an S corporation. You have to have pro rata distributions. This is the reason why you have to be careful, because in this example, I work harder and I want more of the profits, but my partner and I are 50-50 partners. So I would have to take out as wages that difference. If we pay ourselves more wages, we pay more self-employment tax. So now you have to understand unreimbursed employee expenses. So you want to deduct for business purposes a truck, your kids working, a conference, that you will benefit from your business, but your partner doesn't want to share in the expense in the S corporation. Well, you cannot deduct the unreimbursed employee expenses because that deduction was eliminated 8 years ago. We have a solution for that dilemma. If you need help converting to an S corporation, call me, Fred Martinez, the Tax Marshal, 956-451-0793.